All right, Seth Meyer, USDA Chief Economist, big week, Ag Outlook Forum. A lot of things going on in the world right now. But before we get to that, let's just stick to the Ag Outlook Forum. This morning, got an updated look at supply and demand, an updated look at acreage. Let's start with supply and demand. It seems like you are starting to take note of some concerns in South America, Seth.
Oh, no, absolutely. And we've made the last couple months some downward revisions in the size of the crops in Brazil, Argentina, Paraguay. Over the last couple of months, we've dropped them 21 million metric tons in terms of their total production. That's a good chunk. And on top of that, that was February 9th. And we continue, we're still in some of the critical phases of development, and we'll continue to keep an eye on it.
Yeah, so some analysts saying, listen, I don't think that USDA dropped their forecast enough in South America. So what is kind of the caution right now where you guys didn't take a bigger chunk out of that South American production?
So I think when you go back to February 9th, it both seems like not so long ago and it seems like forever ago, right? But we were in a kind of a critical phase of development in terms of the crop. And in addition, when one looks at kind of the weather conditions in Mato Grosso, they're pretty good. And so you're trying to temper this, but, folks can evaluate where the weather has gone from February 9th and make some further adjustments. And we'll come back and do the same here in March.
So in addition to that revision on the supply side, you did revise demand a little. Was that mainly due to the issues in South America? Do you think some of these countries are going to have to come to the U.S., Seth?
Yeah. And so I think one of the things we really talked about today is carry out stocks of October 1 for some of those countries. When we think about our upcoming October 1 stocks and our position during export, they'll have smaller supplies. So we might have a very good export fall. Again, smaller crops from those countries means, more export opportunities for the United States. And again, I won't predict for you where we'll go in March, but we'll continue to watch this and see how things evaluate and incorporate what we know.
Well, commodity prices just going gangbuster today on the news out of Ukraine. But as we see prices continue to just go on this bullish run, USDA, you did give us some insight into where you think acres are going. And this morning, what did you release in your Ag Outlook Forum, Seth?
Yeah, so this morning we said, hey, here's 48 million acres of wheat. A second year of increases for wheat, a rebound. We had some good wheat prices come fall. And so, looking at 48 million acres of wheat, a little bit lighter on corn, coming down a little bit to 92 million acres, still a lot of corn, and then raising beans a little bit at 88 million acres of soybeans. And folks need to remember as well, too, we've got a couple things constraining even more area of those crops, which is all of the remaining crops outside of those three. Prices are pretty good too. Look at where cotton prices are at and things like that. And on top of that, we always start with an assumption of normal prevent plant as well too, which last year was a little bit less than normal prevent plant. And we had some pretty big prevent plant numbers the year before. So kind of, normal prevent plant and pretty good crop prices all around.
Yeah, Seth, this week talked to a few analysts that think that soybeans are buying acres at this point. Now, that was before we saw corn up, 30 cents or so on Thursday. But why are you not in the camp that soybeans are buying more acres right now, Seth?
Well, we are up a little bit from the previous year, and I think we'll continue to watch that corn to soybean price ratio. I think when you look at, it's strengthened a little bit from, when you look at, the bean to corn price ratio, and you've seen it strengthen a little bit more recently and come more favorable for beans, but it's still relative to the last several years, pretty strong corn. Reflecting, when China is in our market, this is actually a pretty strong corn position to where we've been. So I think corn will currently thinking it'll hold some of those acres.
But overall combined acres, it seems like USDA does not think that we're going to see a record number of planted acres when you look at corn, beans, and wheat combined.
No. So, and again, I think part of this is that fluctuation in actual prevent plant and our assumption about prevent plant. And today, if you look through my slides, you'll note I dropped off I'm looking just very narrowly at the change in aggregate acres because I think we're in a position where the market's going to be really sensitive to those issues, right? Do we lag a little bit on planting? Look at the tight situation we're in. And even setting aside the news today, market's going to be sensitive to those issues of whether that crop gets in easy or it gets in hard.
Yeah. So overall, when you look at everything that came out of Thursday's discussion from the Ag Outlook Forum, what was the biggest news for you, Seth?
I do think that, the biggest news, I don't know yet how to digest the issue from Ukraine, and we can talk about that. So, for me, the headlines last night were, we do have some concerns with input prices. I think that today's information, heightens that concern. Prices are good for producers. We're going through a period now of price discovery for revenue assurance for folks' crop insurance at levels not seen in a decade. So you kind of, you set that crop insurance price. We've got 10-year high on that number. So the market is saying you're tempering some of those input prices with higher output prices as well too. But today's news is not yet digestible. Just don't have a way to determine what's going on.
Exactly. So speaking of the war in Ukraine, I mean, things changed quickly, Seth. So out of all the information that you put out this morning in the Ag Outlook Forum, is there anything that now is out of date just based on what we're seeing happen in Ukraine?
Yeah, so I don't think it's out of, and I don't think it's out of date in terms of, do I know what's wrong? No, does it certainly make it a lot broader potential set of outcomes? Yes. But I think we're really going to have to watch how this, because, there's the direct effect on grains. There's the secondary effect on energy. There's the third level effect on sanctions. There's, I don't think we know enough to know where this is going to play out and how it goes. So we're going to continue to watch it. I think it just throws the door wider open into where we could end up.
Yeah. And, when you look at some of the news that's coming out, Secretary Vilsack, his comments this morning out of the Ag Outlook Forum, he acknowledged the issues taking place right now in Ukraine, saying that he hopes that fertilizer producers don't take unfair advantage of the situation. But that's a whole nother level of uncertainty right now that producers are trying to navigate. And so when you look at that and some of the implications it can have on fertilizer production and availability, what are your biggest concerns, Seth?
Yeah, so I think the secretary actually did a better job than I in kind of laying out the market dynamics for agriculture before he added that comment about, hey, let's watch prices. I am concerned about that. I think that, we had a decent campaign and fertilizer application in the fall. I do think that, availability for this coming crop, there's a lot of that in place. But that doesn't mean prices can't rise, right? If folks are worried about fall applications, they'll raise prices and start rationing demand now. And so I think folks will feel this in the new crop. I think that availability is going to be rationed through price. I think a lot of the stuff is physically in place, but if folks are worrying about being able to restock and have nutrients in place for fall, that's where it'll come.
Well, and, some analysts saying, we're also keeping a close eye on China right now. So when you look at the uncertainty in China and what may happen there, is there anything else that could begin to play as a factor into our commodity prices in the next couple months?
Yeah, I don't think it's anything new, right? I mean, I think when I talked about in my presentation, and I heard the secretary make very similar comments, which is the Chinese market is absolutely important to us for trade. One of the messages I took away from some of our trade analysis for the coming year is obviously China contributed to a big amount of the increase in trade. All our other traditional trading partners really held in there nicely, and demand was pretty firm. That's great as well too. And yet there was a lot of countries not on that slide, and those are important countries. So, I think my message and the secretary's message is kind of seem to line up, which is important market. We lack transparency. And maybe diversification and working on those other smaller markets is a good idea.